everyone to our global webinar. Today we have global expert with so many years in the financial world. And also he is working with ACFE on the Global Committee for Education. And he is spreading the knowledge related to fraud examination all over the world. And I got the chance to meet him for so many years and learn a lot from him. He is teaching so many courses related to fraud, fraud related to financial statement fraud, and he is the authorized trainer of the Association of Certified Fraud Examiners in Germany and so many other countries in Europe. And with that, I'm gonna give you to Mr. Kurt, where he's gonna share with you all his experience related to financial statement fraud.
Well, thank you, Iyad, as always. You know, fantastic presentation. Iyad really has a gift of address simple context, the context in simple ways, just amazing, and to be funny at the same time. So I can only say, keep cooking, Iyad. It's amazing what you are doing, okay? You speak in your words. But before I start with my presentation, I just wanted to make a couple of comments. You know, financial statement fraud has always gotten a big attention, you know, because big numbers, you know, they hits the press, and the small ones don't, obviously. So there was always lots of financial presentation, financial statement fraud in the past. So as Iyad nicely already presented, it's done on the income statement, it's done on the balance sheet, and obviously cash flow is king, we know that. You know, unfortunately, you know, when I was at the ISB and I worked with the FASB, there were still two methods are allowed on the cash flow statements. It's the direct method, and then the plug, what I call the plug system, the indirect cash flow method. So if everybody would use the direct method, then I agree with you, cash is king, but it hasn't happened yet. But we're, again, shifting away from, you know, just a simple balance sheet, income statement fraud. We're shifting into the disclosure fraud. You know, that's where the numbers is. Just to, you know, that's, if there's an announcement in the press that something has changed in a company, the value change is dramatic, okay? So that's why I'm also saying upfront here, I look at the financial statements presentation, you know, from a little different standpoint. I include tax fraud, I include other reporting efforts in reporting fraud. I get to this a little later. But as I said, the value changes now are dramatic. You know, Apple Computer, I think, last Friday changed the market cap by 175 billion or some number in the neighborhood there. Huge changes in value, okay? So what you have to really do to discover fraud, I separate objects from value, okay? Obviously, you sell so many products, that's the objects, and they're worth so much. And the thing goes on, I call it the 3 Ps. There's so many people you pay them, and the people don't change if there's a big fraud or big announcement in the press. And the 3rd P, just to complete this, is the physical infrastructure and processes. So that's what I'm looking at, okay? So it's a little different because, as I said, things have changed. It's moving into disclosure, you know? As I said, if a company makes a big disclosure or there's a big announcement, like I mentioned Wirecard in a minute in the fraud cases, then, you know, there's a huge change in the value, okay? And so, but let's continue with the masterclass. When I took my first professional job at a company in Michigan, you know, my first job to do the worldwide consolidation. Well, I grew into it, let's say. And, you know, that was an area I could see there was a lot of movements, and to eliminate the profit intercompany because it hasn't been realized was a difficult thing. So I finally figured it out and obviously made them balance. But there's a lot of movements in this area. The Enron case and other cases relate to a lot of shifting between, you know, shell companies and other companies. So, then I was in Cincinnati. I was international controller, and you know, we bought a lot of companies. It was a New York Stock Exchange traded company. They bought a lot. And then a couple of years later, I was still international controller. They sold all these companies because they didn't want them. And so the point here is I learned a lot more, obviously, when selling these companies we had bought than obviously, you know, when we originally purchased. So again, you can learn different things. And when I moved to PwC, I did kind of the reverse what somebody does. I was a direct entry partner pretty much at PwC. I did a lot of due diligence in M&A, and this helped me to drill down in a granular fashion to understand, you know, where there might be something not kosher, something hidden in the financial statement. So it's always the way you look at things and where you are to understand, you know, any fraudulent transaction or whatever there is. And then after PwC, I spent 10 years at the ISB, the International Financial Standards Board, and obviously, you know, try to implement and get this going, the standard setting, and pretty much could bring in my experience there. I also acted as a chairman of XBL, Extensible Business Reporting Language. That's what it is, and this is really coming into play. Yeah, it's like if your chief cooking is replaced by technology, which there's some machines now in the market. Unfortunately, it's a year, but the technology is actually taken over to a lot of degree. And you know, as I said, it's a changing game. It's moving into this disclosure. And as I said, separate objects from value. I will talk a little later about it. And as Ian said, I'm acting as the chair of the higher ACFE Education Committee. And so looking at the education about, you know, fraud, financial statement fraud, the other frauds in the 12 lessons we are giving here is a good base maybe, you know, to make this whole understanding about financial statement fraud and other fraud really more comparable. And I guess it's a good way what Ian is doing here with the fraudology, and you know, and if you're doing a good job, then we obviously have a product which can be used more on a global scale, which I support all the way. So that's one reason I wanted to be on this program and talk about my part, obviously, you know, about financial statement fraud, since I have a lot of experience there. Not that I would have to think like a fraudster, but with the different positions I had, I really could you know, think as a fraudster. Anyway, this is, I already told you about my background, so I can skip this. I just told you the background from a different standpoint here. So in summary, I worked first for international companies as a CFO, COO, and then went into consulting. Okay, so financial statement fraud. Let's look at the agenda. You know, as basics, we need to look at the fraud tree, obviously, the fraud triangle. Those are, and the report to the nations. Those are some of the statistics and some understanding why people do the fraud, okay, on the fraud triangle or on the fraud tree. And then we'll take a brief look at the fraud cases in the capital markets. Ian already did some of this, so I just want to come from a different corner there again. Financial reporting standards, you know, when not too long ago, we had, and every country had their own financial reporting standards. And I took pride, basically 3 people, when the PwC moved me to London, there were 3 people starting, you know, from the old IISs into the new IFRS organization. And that's why I spent 10 years there. And the other dream was always to have global standards, but the US obviously continued with their own, which is okay. Those are good standards. So, but in total, we have now global standards for financial reporting. It's one of the few professions, I think. I saw it obviously in the IT world, but in the other world, legal world, or other, you know, activities worldwide, we don't have that transparency in standard setting. They're trying, but I think we did a tremendous job to introduce this IFS all over the place. Then I need to talk about the major types of financial statement fraud. And then obviously about non-financial disclosure and reporting fraud, because it's not moving in financial disclosure, but now we have more non-financial because of nature, because of all the climate change, Corona, you name it. So we need to work more with the stakeholders also to see whether there's some fraudulent shenanigans going on. And then obviously at the end we'll talk about the summary here. This is obviously the famous fraud tree, okay? So we got obviously an overstatement of income and an understatement of income. And when I was in the audit, obviously overstatement is the most, because people like to increase their share value. And so they try to, or get their bonus. I had a couple of cases where people try to get their bonus to fake the numbers at year end. So there are always some kind of reasons to do these things. But sometimes I had one case, they wanted to make a lower profit, okay? The new management came in and they wanted to, there were some accruals, as he had said. Accruals are always a fake thing, you got to be very careful. And the faster you close, obviously, the less accruals you have. But anyway, they wanted to carry an old accrual into the new year to make their bonus. So I said, no, you don't need that money anymore, what you accrued. And I said, I'm not going to sign a report unless you release this, okay? So you have both things, okay? And as I said, I look at the fraud tree. The fraud tree is a little, I might as well say this too, it's a little outdated right now, unfortunately, because the cash is changing. It's changing into different currencies. It's changing into fintech is doing wonders. So we need to really take a look at the fraud tree, in my opinion, as I said, to separate objects from value, because value doesn't mean that much anymore, and it might be misleading in some cases. So I rather track the objects, and that's again, it's the product and services, obviously, it's the people, and it's the physical infrastructure, which we need to do. And here we have obviously the fraud tree. And the the fraud triangle is concerned. We got financial statement fraud, usually, in a collusive approach. The top management is usually involved in doing this fraudulent thing. So again, it's from the top down. It focuses again pretty much on value, okay? Because they want to make their bonus again. They want to make obviously some other movements, and the new thing there is also coming in to detect these things as whistleblowing, and that whistleblowing could be internally and it could be externally. Okay. In fact, in a minute, when I show you the big fraud cases, Wirecard is a big scandal that came just up the last couple of months here in Germany. And actually the Financial Times did a whistleblowing on it a year ago. It was an amazing case. So, it's, discovery is coming very fast because of these things, communication and everything else. But let's just also not forget the definition of financial statement fraud. It's a deliberate misrepresentation of the financial condition at a particular date of an enterprise accomplished through the intentional misstatement or omission of amounts, or again, I highlighted disclosures in the financial statements to deceive financial statement users, okay? And financial statement users are also now big, huge investors by and large, okay? All right, then we got the report to the nations. So usually here on the report to the nations, as far as quantity of fraud cases, it's low. When it hits big, okay? And it's usually only about 8 to 10% of the cases. But they, you know, the ACFE reported to the nations in this booklet coming out the report coming out every 2 years, that's around $1 million per case. And as I said, you know, these other cases, they reach now billions, you know, when it hits. All right. So that's, as I said, this was what, 2-3 years ago. Just 8% of cases, the median loss $1 million. Okay, so financial statement, the fraud cases, obviously. I'm not going through in the detail there as we have it all. But Enron basically, you know, what finally did them in, they shredded their papers, okay? And with it, Arthur Andersen fell down as well. You know, that was a kind of the outcome of the total thing. And destroying records obviously is not a good thing after you already suspicious that there might be some financial statement fraud. Parmalat, an Italian company, they did pretty much double bookkeeping. And you know, the funny thing is the Italians invented double bookkeeping, and obviously double bookkeeping is also used for, as I said, I look at the total reporting, business reporting case. Double bookkeeping is usually also used for keeping a double set of books for taxes and one for business. As long as they keep another good set for management reporting, that's I guess that's good. I mentioned already to a large degree Wirecard. They did some what it's called round tripping. They had a lot of fake companies there too, and they lost 25 billion in 3 weeks. So their share value, you know, as I said, went down dramatically. Again, the value didn't change from what they sold and everything else. And the people employed, they employed 5,000 people, they didn't change. So again, the objects didn't change, but the value dramatically, you know, in a couple of days disappeared. The whole company, obviously, it's in liquidation right now. Okay, so as I said before, the biggest one people use for financial statement fraud is changing of revenue. And why is that? If you look at it, company is making 10 million, the profit is 1 million, or I say here more specifically the operating profit, and then they have a fake 1 million increase to 11 million. So what's the profit then? Well, I guess maybe it's too easy, but put it in the chat and see what we come up with. But obviously there are no additional resources spent, so the answer is clear. Very lucrative to make it fake. Channel stuffing, all these good things I've seen from the audit standpoint. And if you go in knowing it, you warn top management if they do it, you're not going to sign the report. Okay. The other problem still from an accounting standpoint, and that was somewhat true at Enron too, separation, whether it's an agent sale or a full sale, that you have full control over the products, over the objects you're selling. And obviously, if you look at this chart, Enron was totally out of range already. They were, I think, at the Fortune 500, they were on the top 10, and they only had like 33,000 people. So from that size, you know, was a magic. And obviously, a lot of sales they should have been probably accounted for as agent sales just for the commission. So that's they used the loopholes in some of the accounting standards, not consolidating certain you know, subsidiaries, not 100% following the accounting principles, where we're weak on the definition of agent versus full credit sales. So they did that. Anyway, I think you were there too. We had a luncheon, the ACFE at the conference, and this was at the Middle East conferences. We had lunch with him. He invited us afterwards, after his speech. It was interesting. He's, short, energetic man, was still somewhat, he believed he did the right things. It wasn't too bad. So it was amazing how to, when we had a chance to talk to him. Apologies for the kind of shady business card. I got a little scrambled up in my pocket, I guess. So, okay. Here, as I said, everything is shifting into disclosure on the financial statement fraud. You can see it. Institutional investors pretty much own everything. They own about 80% of the German DAX. They own the big companies. So it's a different game. Not too many private people getting in there anymore. Obviously, the global market is also changing. It's changing fast. The Asian companies, are more public companies than anything else. But overall, we only have about 41,000 listed companies in the world. Not so much, but a market value of 80 trillion. And, if you look at it in the Corona times, 20 trillion less possible. Unbelievable, what happens here. So you have to look at the size again, but the value is something else, as I told you already. Okay, here, this is the World Exchanges Organization. They're all the exchanges are members there. I used to work pretty close with them when we implemented IFRS all over the world, but they are able to have all the market cap numbers for the whole world next morning. It's unbelievable. So they have all these numbers. Now look at currencies. Again, I want to get you a feeling that value is not the way to track it anymore necessarily. If you want to track fraud, undercover fraud, you have to look at the objects. Again, the product movements, the people movements, and what else there is, changes in the infrastructure. The currency trading a day is 5.1 trillion. Unbelievable. And then we got the private and smaller companies. And that's where the financial statement fraud is shifting into. It's shifting into the smaller market. Nobody seems to care that much. It's difficult to discover, okay? So that's what that is. And obviously we have other entities, not for profit. They all file reports one way, one way or the other. And there's another thing I'm involved there, and I'm telling you this here. What we need to track these objects, track these legal entities, is after the financial crisis 2008, we I helped to introduce a legal entity identifier. That means we have pretty much a number, like now we have the IBAN numbers, for the bank accounts. We need this kind of identifier globally to see the tracking and movement, of activities. And they're making good progress, but it still probably takes a couple of years before this infrastructure is there. But remember, when you come across that, the LEI, the legal entity identifier, big things to discourage financial statement fraud, because once you identify the flow, easier to see what happens and where it happens. Then another player in the financial statement fraud is the IOSCO. Again, I worked very detailed with them when they moved from Toronto to Madrid, where they are now. And the SEC, the US SEC, is leading it, in there. Big player, obviously. And they are encouraging better reports, better, fraud protection, all these other things, and working together on a global scale. And I see here their next conference is planned for November in Dubai. I hope they can make it, because if they can, try to get in there and try to get a feeling what they are doing. Very important organization for the capital markets. And then obviously we have the ISB, my old love. Obviously, as I said, I spent 10 years there, and they're making good progress. Okay, and I mentioned already, whether US GAAP and IFRS is going to finally come together. I said 10 years ago, I guess, or longer even now. Only technology is going to do it, because the US GAAP is a very good, obviously, accounting system. It's very detailed, industry specific, which we need also to discover, financial statement fraud. You cannot, last not least, if you compare it to your other companies in your industry, that's, if something goes wrong, then there's an indication, from that comparison to your peers in the industry. Okay. Not that you want to read my book there, IFRS and XBRL. It's 729 pages, but it's kind of a summary what I did there at the ISB and what I believe, the standard should look like in the future. One thing is they need to codify the IFRSs, which the FASB did, and hopefully the ISB is doing that also to make it easier. Again, to making the standards more comparable on a global scale. A project hopefully they're getting to. Just a couple of these things. You had already mentioned it. Fictitious revenue, obviously, that's the most lucrative one. That's why when the ISB and the FASB came out on IFRS 15 with the same standard for revenue recognition, and that's really a good thing, as you just said, because it's so big with people trying to fake it. I don't have the time here right now, but basically it's a 5-step approach how you identify and audit or book, actually I should say, the revenue from contracts with customers. You identify the contracts with the customer. Again, the objects is a key here. Then identify separate performance obligation, and then the value gets in there. And obviously the transaction price is value. And then the cutoff obviously is important. You need to understand basically the billing process. In the Wirecard, I doubt that they understood the billing, because Wirecard was a fintech, basically, and the billing, if you didn't understand the billing, you had no chance to, or very difficult for your auditors to obviously identify this financial statement fraud. Okay, so timing differences, he had already mentioned. Nice thing to do. When I was CFO and controller, and that's like 20, 30 years ago, I made everybody close the books in 5 days, regardless what there was, because that takes care of a lot of accrual stuff. If somebody can't close the books in 3 months, I guarantee you, either his boss is on the back of the CFO to find some more profits, or something else is wrong. So, and obviously the construction industry is difficult to cut off. So that by industry definition, they have to make a lot of estimates because the projects go over several periods. Very important for Dubai, obviously. Okay, I think I'm skipping a little bit on inventory and receivables. Again, on the Wirecard, I think what they did, they did an accounting entry directly cash to revenue to sales. So they avoided going through receivables, which was smart, because the auditors are still old-fashioned in a way to confirm accounts receivables. And so they don't confirm cash in the detail. They do some of these other things like inventory and obviously taking physicals, and also looking at the receivables more. Okay, then you got the concealed liability and expenses, usually lawsuits, product return, and then the new IFRS 15 really takes care of it, because it's more of a cooking recipe, yet, if you will, to see how you could account for these things. Okay, and again, I already talked lots about disclosure, subsequent events. Again, if you close early, you don't have to worry about it. And management fraud, well, that's, as I said, whistleblowing is about the only thing to find out what's going on there. Related parties, conflict of interest, that is also a very, very dangerous thing. You got to watch that one. Disclose it, and then you're in the safe haven. Accounting changes, obviously, you got to disclose, you got new tools. I'm working right now with a couple of these big companies, SAP, Workiva is one. They can do pretty much dig in granular basis into, your spreadsheets, into your ERP software, and really, track this. And we're working on tracking, also finding better system to track with IoT, finding better ways to track the objects. And as I said, that's really my future endeavor to see, how we can, from a fraud standpoint, discover these, just looking at objects more, object tracking. Then you can do some financial statement analysis. Sometimes I'm amazed that the industry specialists, the analysts, don't find more of this stuff. Now we got fraud prevention, deterrence, and disclosures. And the key is governance. At the top, if we got a top that is rotten and doesn't have the integrity, you're out. The external auditors, obviously, they are limited only material to find material items. So fraud is obviously, they're looking for fraud, but not in the detail. The internal auditors should. The internal auditors should really find, and I think in the modern approach, and that's why what Ian is doing, he is obviously teaching also the CIA and then the CFE, and these things have to come together. And I think there's lots of room for the internal auditors to discover more fraud. I already talked about whistleblowing, and I already talked about technology, using it. And then obviously I want to just a couple of words on non-financial reporting, and again, separating objects from value there. And the ACFE just came out with this anti-fraud playbook there. Ought to read it. It's very good. They're trying to build awareness with it, and also trying to get risk management into the play, to discover financial statement fraud. As I said, that's so we are coming together from an ACFE and the internal audit standpoint further together. As I said, look at business reporting, not just financial, book. The big companies, Microsoft, Amazon, Apple, I said, only 10% is real value in there. The rest is all, intangibles. I've spent 10 years on the Journal of Intellectual Capital. Obviously, it's very difficult to measure, impossible again. Again, that's why I'm falling back to objects. Okay, as I said, Apple jumped 10% on Friday. Tesla is now the highest valued automotive company in the world. Unbelievable. Okay, then here the SASB on non-financial, remember that one. They do metrics stuff and more on an object basis by 77 industries. So if you find your industry in there and look what is important from an object movement standpoint, and that's you will see that. And obviously non-financial reporting now is trying to consolidate. There are a lot of players in there. I'm also working with the European Commission on this stuff, on a project to see what finally survives. The GR is working together with the SASB. Hopefully that gets us somewhere. As I said, brief look at the IRC came up with 6 capitals. I think there only should be 3, products, people, and physical infrastructure. And the rest you can only disclose, because you can't measure it. Social and relational capital, human capital, and natural capital, okay? And as I said, if you just listen to it, what I said, I separate objects from value. This is just a summary here. And this little chart, if you don't have to get my business card, just put in Google performance reporting objects, these 3 words, and click on images. That has survived for a long time, being in a #1 pole position. So you find this, you don't even need to know my name, just Google these 3 words. So I'm kind of proud, forgive me, I'm kind of proud of it, because there got to be something true on this movement and future thing. And to close with the future here, it has has warned me not to go over time too much. This is a new income statement proposal from the ISB. And you recognize here revenue, basically products, as I said, then you got employees, that's the people, and the amortization usually relates to intangible or depreciation to physical infrastructure. So there are my 3 P's up there on the big numbers, 1, 2, and 3, the rest is small stuff. And it's going to be interesting to see, when they're finalizing this project to make a cleaner income statement and then hook it up to the direct cash flow statement. That was always my dream. That would reduce financial statement fraud tremendously. Okay. I'm also, for 15 years, I'm working with UNCTAD ISSA in Geneva. There are all the standards that is coming together on an annual basis, and we are discussing, how the future should look like and how we can reduce fraud and how we can make actually in a way to make the better world here. And anyway, with that questions, and for more magic, I'm handing back to Ian again.
All right, thank you very much for your valuable information. Definitely your contribution to the financial world is really great with all, the knowledge and experience. But we have some questions from the audience. The first question, they are speaking about Wirecard. What is your view about your Wirecard? What happened? What are the schemes?
Well, it's obviously very preliminary, and and I have to be careful what I'm saying. It's strictly my own opinion. Obviously, it relates to sales because the big headlines were 2 billion cash missing. Okay, obviously, if you have fake sales, then obviously the cash isn't there. So that was one thing, and obviously, I looked at the annual reports for the last couple of years. And there was also, EY was holding back on the last year's report, 2019. So it's going to be very interesting to see what finally comes out. But it's certainly a couple of management, the top guy is in prison, obviously. So there had to be something cooked with the books yet.
All right, thank you very much. Another question, they are speaking about IFRS. So one question saying, I thought IFRS was moving to comprehensive income statement. So what is your opinion?
Well, the easier it makes, you make it, obviously, you can't have everything in fair value. That's another problem in the reporting. You got historical values, you got fixed, you got fair value, and obviously until you realize it, you need to park it somewhere, from currency translation to other things. And that's why I agree with you. When I look at financial statement, I look at cash flow and disclosure. Okay, that's the most important thing.
Thank you very much. Another question, what about the current trends in the last couple of months related to Corona? Do you see any kind of different financial schemes that companies are doing to not show the effect of Corona on their financial statements?
Well, it depends on the industry, I guess. I have one of my students in his master's thesis writing right now fraud during Corona. And so he's in the logistics business, and he said already, a lot of packages are missing. If they didn't have the good tracking, I'm coming back to my object stuff. The logistics industry from Amazon, just as an example, they were ways ahead track this stuff. Some other, industries where they're not knowing where their objects are, they don't know where their people are, how much they work, makes it more difficult. Easier to do some fraudulent behavior. And as I said, the big companies, they are getting more transparent all the time. The financial statement fraud is moving into the smaller companies, the lower ones who are not that much watched, okay? But I'm sure overall, there's going to be more companies going bankrupt. So with that, usually, as we know from bankruptcy, they're trying to get as much money illegally out of the entity as they can. So I think to watch the middle market and the lower market.
Thank you very much. Our final question, they are speaking about the current world we are living in and the uncertain future that we have is leading so many companies to figure out what are their reports going to be in 2020. So the most challenging thing for auditors, it's actually what's going to happen in 2020 financial reports. Because at the end of the day, so many organizations, they are focusing on creating this intangible value, or they are saying that actually we have opportunity for us to continue doing business and we don't have any issues in our operation in 2021. And now it's the challenge for the auditors to figure out what's going to happen. So how do you see these companies when they are going to try to account for all these intangible assets that they have generated and all this virtual operation that they are running now?
Well, fortunately to IS 38, you cannot capitalize these intangibles, you know, only the research part. So there are limits to it, what they can cheat on. The accruals, again, as you mentioned, you know, that's where you have to really go in what is needed, you know, for the future to make up for these things. People-related expenses, pension plans, there are all kinds of things on people-related stuff. You know, the product sales, they're there if you order them correctly. Okay, it's the people section which has the most effect on the financial statements. I say, got to be careful. You know, what are the expenses? What has to be done there, and obviously what they want to show. It goes both ways. They could overstate income and understate income.
Yes, I agree with you 100%. And it's really interesting to see exactly how some organizations, they are accounting for their intangible assets. So I have seen the financial statement for Zain Telecom. And Zain Telecom, when they published their financial statement, they had the cover page with all the photos of their executive. And they say, these are the most valuable assets we have in our organization. So they are trying to show the shareholders that actually our assets is not the financial numbers and the operations that we have, but actually the actual individuals and capabilities and the talents that we have. But we can't report them in the financial statement, so we have them on the cover sheet, which was a very intelligent way of putting it.
Well, that's what they always try to do. I wrote my master's thesis for my MBA actually on human assets. And it's a difficult subject, you know. You can't measure the people. You know, the only area where you measure people, where you have a market, is in the football fields. You know, they sell these players at a certain thing, and then they actually. I looked at the financial statement of Borussia Dortmund, the German, one of these, Bundesliga, and they write these off. If a player doesn't work out, they write him off, and then they capitalize them at what they bought him for. But there's only very few areas where you can do it nearly. You know, look at Apple, Jobs, look at Tesla. You know, that's why the disclosure on people, what you have, is important, as you said, but you can't overdo it either. You have to have a good product.
All right, perfect. Thank you very much for all your valuable information and for sharing your knowledge with us. Thank you all for attending this session. This is the conclusion of our session. Hopefully we'll see you next time. And thank you all for attending.